Welcome back to the channel. My name is Gordon Frayne, and today we're back with another weekly roundup video for this week in crypto. Today is Saturday, July 13th, 2024, and it's been another choppy week in the markets. As always, if you enjoy the content, please make sure to smash that thumbs up button below. Hit that subscribe button as well. And if you want to get notified about future videos, make sure to smash that bell notification icon. We're dropping videos every day on the channel. And don't forget to grab your free copy of The Rise of Bitcoin. It's going to be linked in the description below. It is my gift to you. Grab it while it's free. So let's get into it. So it's been another choppy week in the markets as we've seen the price of Bitcoin still hovering around that kind of $56,000 to $59,000 level. We're currently sitting at a Bitcoin price of $58,780. You can see that we're up a bit more than 1.4% on the week. Ethereum sitting back above $3,100, about $3,159 right now. BNB is at $530 and Solana is just under $140. So it's been a choppy week in the markets, as we said, but overall it seems like we're making a little bit of a recovery and the bottom could be in for this most recent retracement of Bitcoin. We're currently sitting at a market cap of 2.17 trillion US dollars. And if we zoom out and look at the weekly chart, we can see that we are up ever so slightly on the week here, up from 2.13 trillion last Saturday, to 2.17 trillion here today. So market is up about 1% week over week, and it is looking and boding a bit stronger for Bitcoin and the rest of the market over the past 7 days. If we even look at the Bitcoin active addresses, we're seeing active addresses on Bitcoin starting to pick up again, having been at higher numbers here in Q4 of 2023. We saw a dip and a drop off here throughout the first part of 2024 before kind of bottoming out here and getting back up above this kind of 718,000 Bitcoin active addresses mark. So again, bit of a tide turning there and upwards trajectory in terms of active addresses on Bitcoin once again. If we look at the top gainers and losers for the past 7 days, we can see that there is a good chunk of green on the markets. Many of the altcoins have bounced back over the past 7 days, having retraced, upwards of 25-35%. The previous week, we've got Notcoin leading the way, up about 32%. Ripple is even up 21%, having a big bounce. Cardano and Stellar, some of the OGs, are up about 18 and 15% respectively. Celestia is up about 15%. ICP is up about 13%. Sui is up 11%. Filecoin up just under 10%. We've got Near Protocol up about 8.5%. Pith Network up about 6.4%. Polygon up about 5%. So plenty of green in the markets. Many of the altcoins that saw those very large retracements are seeing a bounce back over the past 7 days. However, there is still a good chunk of red on the markets. Many of the meme coins are actually still down over the past 7 days. Dog of Hat down about 21%. Render down about 12.7% as one of the leading AI coins. Pepe and Brett down about 10 and 9% respectively. Floki also down about 6%. Ondo, real world asset token, down about 5.2%. Bonk is down just under 4%. Caspa is down about 3%. We've got Jupiter down about 3% as well. HBAR down about 2%. Solana itself down about 1.67%. And Uniswap down just under 1% as well. So despite the fact that we've seen a good chunk of green in the market, there is still a healthy dose of red, even in the past week, with many of the meme coins taking a hit there. And many of these coins, even though they've been bouncing back in the past 48 hours, are still down on the week overall. Jumping over to the Bitcoin dominance chart, if we open this up, we can see that Bitcoin dominance again has been extremely solid over the past number of months. If we zoom in to the daily chart though, we are down, I think, ever so slightly on the past 7 days. I think we were sitting up closer to the 55% mark this time last week. So we're currently sitting at about 54.5% in terms of overall dominance. Again, this is on the daily chart. If we zoom out to the weekly chart, again, we can see that very healthy upwards trend here since the beginning of 2023. Bitcoin dominance has been extremely strong and has not broken to the downside significantly. It looks like we could be going through a little bit of a period of consolidation here, kind of since March of this year. We're not seeing that same kind of upwards momentum, but still standing pretty strong here, 54.52%. And it's not quite alt season just yet, which brings us into our altcoin season index. We can see we're currently sitting at a score of 41, so it is still technically more of a Bitcoin month than an altcoin month. Will we get altcoin season soon? I think we would need to see this Bitcoin dominance breaking down even further before we really kick into a fully fledged altcoin season, and again that is reflected in the altcoin season index over here. If we jump in and look at the top 50 coins and their performance over the past month, we can see that Bitcoin itself is down about 13.9% on the month. This chart is dominated by a lot of red over the past 30 days. We can see the biggest losers being Dog with Hat, Injective, Pepe, Render, Fetch, Arbitrum, IMX, Sui, Doge, and HBAR down the end of the table here. We do have a few outliers that have been performing better over the past month, namely Tron, Maker, Ripple, XLM, Leo, and even Cardano, that are all in the green. So if you're holding those tokens over the past month, well done to you. But vast majority of the top 50 are in the red for the past month, with Bitcoin itself being down about 13.9%. If we jump over to the Dune Narratives dashboard, again, we can see Narratives month-to-date performance is currently showing us that privacy is the best performing narrative this month thus far, followed by options, LRTs, NFTs, GambleFi, the Bitcoin narrative itself, Layer 1's centralized exchanges, and DeFi 1.0. So again, it's always worth keeping an eye on the narratives that are performing month over month, and which narratives your assets are a part of, because all these different narratives will have their own day in the sun as we move through the bull market. Jumping over to the Bitcoin spot ETFs, and if we look at the flows over the past week or so, again, we can see that this was a very strong, healthy week. We saw a very bad few weeks prior to this week. We saw negative outflows here for, a significant period of these kind of 3 weeks that we saw here all throughout the month of June. We saw a couple of days turn more positive here at the very beginning of July. And then this past week, we can see very strong and healthy buys from all of the spot Bitcoin ETF issuers. We had positive daily inflows for all of the past 5 trading days, with I think Thursday and Friday this past week being the strongest days of the week. So lots of positive sentiment. We can see the graph ticking upwards once again here. We did see this lull with the outflows over the past few weeks, with that kind of fear, uncertainty, and doubt in the market. We've seen the German government and Mt. Gox pushing a lot of Bitcoin into the market and selling off, which kind of sparked a lot of this fear and some of the sell-offs from the ETFs as well. But most of that has been flushed out of the system now, and we're seeing the orders starting to pick up again, with a very strong week over the past 5 trading days for the Bitcoin spot ETFs. If we go over, we can see that yesterday the total net flows for July 12th were over 5,371 Bitcoin purchased up by the US spot Bitcoin ETF issuers. We know that since the halving event has occurred, that the amount of Bitcoin that's been purchased here, this is 10x, more than 10x the daily supply issuance based on the supply schedule. So a huge amount of demand coming in for the Bitcoin that is coming onto the market. If we jump over to the cycle low multiple, again, what we're looking at here is the performance of Bitcoin in the lead up to and aftermath of the 3 previous halving events. They're called eras on this chart. We can refer to them as cycles as well. Basically, the red line here marking our current cycle or trajectory, with day 0 in the middle of the graph here representing the halving date, which took place on April 20th this year, 2024. And as you can see, this red line, I think technically it is the worst performance of Bitcoin after the halving event when we compare it to the other three cycles. So the blue line represents the performance of Bitcoin in the aftermath of the 2012 halving, the orange line representing Bitcoin's performance in the aftermath of the 2016 halving, and the green line representing its performance in the aftermath of the 2020 halving. So technically, with this most recent dip, it is the worst performance of Bitcoin in the 90 days post-halving event. However, if we zoom out and look at the bigger trend, we know that there is a lot of positivity on the horizon. We know that the typical move for Bitcoin in the 12 to 18 months after the halving event is to put in new all-time highs. And again, past performance is not always indicative of future price action. But if we zoom out, think about where we are in the cycle, it is very likely we will be going upwards from here. So lots of interesting stuff, and always worth remembering the bigger picture and where we are in the cycle. Jumping over and looking at real world assets, again, tokenized treasuries and the tokenization of all these different assets is continuing to accelerate on chain. We can see here BlackRock's BUIDL fund in the orange, gold, yellow color at the top here. Initially, they launched this fund with, I think, around $50 million, as you can see, but we've grown now and continue to grow. We're up over 523 million US dollars for the BlackRock BUIDL tokenization fund alone. We've got over 1.85 billion in tokenized treasuries on chain, up just under 3% from 7 days ago. This entire market for real world assets and asset tokenization is only going to continue to grow, and we can see some of the major chains here that are facilitating that, being Ethereum, Stellar, Solana, Mantle, Gnosis, and Polygon as well. If we look at some of the stable coins, private credit, we've got global bonds, we've got commodities, and we've got stocks. A lot of big stuff happening here in terms of real world asset tokenization. RWA.xyz are continuing to improve everything on the platform here. And again, lots of positive sentiment around stablecoin regulation in Europe, with the MiCA regulation coming into effect just a couple of weeks ago, where the opportunity for more capital to flow into this space have US dollars pegged on the stablecoin networks coming from Circle and Tether, and also with the accelerated view, I think, coming from Europe that we need more Euro stablecoins getting backed by European bonds is on the horizon. So I think we're going to be seeing a lot of capital inflow for stablecoins over the course of the next few months. The German government have been selling off all of their Bitcoin over the past number of weeks and days. They're currently down to a balance of $231. So this was in the billions as of a few weeks ago. Huge amounts of sell-off happening. And again, this was one of the major reasons why we were seeing such a tank in the Bitcoin price, going from, above that $60,000 level down to the 54, 55K level. That sell-off is done. There is still some stuff happening with Mt. Gox, but I think the major sell-off from these two whales that were holding a huge amount of Bitcoin is over, at least for the moment. And finally, looking at the CME FedWatch, the likelihood of a rate cut in September is now up above 93.8%. We saw Jerome Powell in Washington during the week, I believe, talking about the interest rates and the Federal Reserve. And again, the likelihood of a rate cut in September is now up at 93.8%, meaning that we're seeing a potential quantitative easing on the horizon, which would lead to greater liquidity and potential printing of more US dollars, which would have a knock-on effect to not just Bitcoin and crypto, but the entire economy as a whole. And some of that capital would definitely flow into the Bitcoin and crypto space. So again, it'll be very interesting to watch what is going to happen in terms of rate cuts over the next couple of months, and how that will impact the global macro markets and the entire crypto and Bitcoin industry as a whole. So worth keeping an eye on this as well. Very high likelihood of rate cuts coming very, very soon. So that is the week in Bitcoin and crypto. We're seeing once again Bitcoin sitting at $58,671. Here on Saturday, July 13th, 2024, we're up a bit over 1.4% on the week. It is still, a bit of a choppy market. Many people are thinking the bottom has been in for this most recent retracement, and that we're seeing that kind of accumulation going back from 54K up to, almost 59,000 over the past few days. So let's wait and see where we go from here. Of course, if you are lucky enough to have some capital on hand, it was a very good buying opportunity. Many of the altcoins took a 20 to 30% hit in the past couple of weeks. Of course, this is not financial advice, but if you understand this technology, if you understand where we're going, then it was a very good buy the dip opportunity. As always, if you enjoy the content, please make sure to smash that thumbs up button below, hit that subscribe button as well, and if you want to get notified about future videos, smash that bell notification icon. And before you leave, don't forget to grab your free copy of The Rise of Bitcoin. It's linked in the description below. Grab it while it's free. It is my gift to you, and as always, we'll catch you in the next one.